$10 million for a single Bitcoin, and not in the far-off science fiction future, but by the year 2031, followed by 20 million just 4 years later. This isn't just random hype from a Moonboy Twitter account, it's a projection coming from a detailed economic model built on statistical simulations that attempt to predict Bitcoin's price trajectory decades ahead. Already it's causing heated debate. Is this prediction absurdly bullish, or is it actually too conservative for what Bitcoin might achieve? Today we're going to break this down. We'll explore how the model works, why its assumptions matter more than the numbers, how it compares to past predictions, and what conditions could actually make this a reality. And of course, I'll share my own perspective, what this means for long-term strategy, how to prepare for wild scenarios, and how to keep your head while everyone else loses theirs. This prediction comes from what's called a Monte Carlo simulation, named after the famous casino city, because it relies on probabilities and randomness. Here's how it works. You take a set of starting conditions, in this case, Bitcoin's current price, supply, demand trends, and liquidity. You then run thousands, sometimes millions of simulated futures, where key variables change slightly each time. Over many runs, patterns emerge. You can see what's most likely, what's extreme, and how wide the possible outcomes really are. In this case, the simulation is showing a median path, the middle road, where Bitcoin reaches $10 million by 2031. But look closely, after 2026, the range of possible prices explodes. The top band soars to astronomical levels, while the bottom band still shows solid growth, but nowhere near the 10 million mark. This widening range is the model telling us, beyond a certain point, the uncertainty becomes huge. That's why, honestly, any projection a decade out should always be taken with healthy skepticism. The big driver here is liquidity assumptions. The model assumes that the liquid Bitcoin supply, meaning coins available for sale, keeps shrinking. This could happen if more people move their coins into cold storage, treasuries, or multi-sig setups, where they're effectively taken off the market for years. At the same time, demand keeps building, and when demand has to fight over fewer and fewer coins, prices can go vertical. This is what the model calls a liquidity squeeze, and it's the core reason the numbers get so big so fast. Now, before we get carried away and start pricing our yachts, we have to talk about the reality of Bitcoin price models. Bitcoin history is full of charts that looked flawless, right up until they didn't. The most famous, Plan B's stock-to-flow model. For years, it tracked Bitcoin almost perfectly. Its logic was simple. Bitcoin's scarcity, the predictable reduction of new supply through halvings, should steadily push the price higher. For a while, it worked like magic, but after the 2021 bull run, it broke down. Why? Because markets aren't driven by scarcity alone. Macro conditions, regulatory changes, investor sentiment, all of these can override the math, at least temporarily. And then there are the outright extreme calls, like John McAfee's infamous $1 million Bitcoin prediction by 2020. Not only did it miss by a mile, but it damaged credibility for anyone making bold price calls. The takeaway? Models are tools, not prophecies. They're only as good as the assumptions behind them. If those assumptions change, if demand slows, if liquidity returns to exchanges, if macro conditions shift, the model's outcomes can collapse overnight. So, could $10 million Bitcoin actually happen? Well, it's not impossible, but it would take what I call the perfect macro storm. Let's break it down into three major forces. First, institutional adoption on steroids. ETFs have opened the door for traditional investors, but for 10 million to happen, that door needs to become a highway. We'd need corporate treasuries holding Bitcoin, sovereign wealth funds allocating billions, and maybe even central banks adding BTC to their reserves. Second, a fiat currency confidence crisis. Imagine persistent high inflation, unsustainable national debt, or, a US dollar losing its reserve currency status. If people and governments start to lose faith in fiat, the migration into hard assets like Bitcoin could be absolutely massive. Third, a true liquidity drought. Right now, millions of coins are in cold storage, lost or simply held by long-term hodlers who refuse to sell. If that trend accelerates while demand spikes, the amount of BTC available for purchase could shrink to a tiny fraction of the total supply. That's when price moves stop being gradual and start being explosive. These three factors, adoption, fiat crisis, and liquidity, working together could indeed push Bitcoin into multi-million territory. But here's the hard truth. We've never seen all three align at this scale before. It would be, honestly, unprecedented. It's easy to get swept up in the upside, right? But extreme upside comes with extreme risk. Let's talk about regulation. Governments have the power to slow adoption through heavy taxation, strict KYC and AML rules, or even outright bans in certain regions. Bitcoin can't be shut down, but access to it can definitely be made much harder. Then there are technology risks. While the threat of quantum computing breaking Bitcoin is often overstated, a major security event, whether from bugs, attacks, or network splits, could really damage trust. And don't forget market psychology. Humans are not purely rational investors. We take profits at round numbers. If Bitcoin nears 1 million, 5 million, or 10 million, huge waves of selling could trigger corrections so sharp they shake even committed hodlers. These risks don't mean Bitcoin can't go to 10 million, but they're exactly why betting everything on that scenario is dangerous. So where do I stand? I treat extreme predictions, bullish or bearish, as thought experiments, not roadmaps. Bitcoin doesn't care about my optimism, your optimism, or anyone's model. My approach is boring, and honestly, that's why it works. I dollar cost average, regardless of short-term noise. I self-custody my coins. I prepare for volatility and opportunity, knowing both will come. If Bitcoin hits 10 million, fantastic. If it doesn't, I still own an asset I believe will outperform fiat over decades. The key is to build a strategy you can stick to through bull markets, bear markets, and sideways markets. Because the future price won't be decided by charts alone, it'll be decided by human behavior, liquidity, and macro forces far bigger than any one of us. If you enjoyed going deeper than the average headline, drop a like, share this with someone who thinks models are gospel, and join the sharp side. I'm AlpineHodler. See you in the next one.